Hey, my name is Connor, and today I want to show you how to maximize the value that you get from stock screening. There are a lot of screeners out there in the market. Many of them look like they were built in the 90s and haven't been updated since. And a lot of them don't have the global access to markets that you might want, as well as the data points that you're interested in filtering for, whether it's fundamental or technical. Stock screening is a vital part of the investment process for some investors. They want to find that basket of stocks that meets the specific criteria that they're interested in. And from there, they can then conduct further research. So I'm going to be showing you how to do that today, as well as some kind of tips and tricks on the particular screener that we're going to be showing you. So the screener that I want to show you today is Koyfin's, a global data platform for anything from equities to commodities and other securities. So we're going to be jumping into the screener today, and I'll show you a few other things on the platform as well. But the focus is really just going to be here on the screener. So here's the screening tool. We're going to go ahead and open that up, and you'll see that Koyfin gives you a bunch of preset templates. We're going to be creating a few from scratch today, just to show you the kind of starting process and how you get an output from that. So let's go ahead and create one from scratch. So the first thing you see here is the trading regions. So we've got US and Canada up here. Primary security, this is just going to filter out all of the related securities. Apple, for example, has securities listed on many exchanges. If we have primary security hit yes, we're going to be filtering out all those other ones and just focus on the US one. You can turn it off if you want, it is optional. We're going to go ahead and add an investment criteria here. We can choose from countries, descriptions, industries, sectors, ETF constituents as well. I'm going to show you something interesting with that shortly. But for now, we're going to just pick country. So if you wanted to look for, let's say, small cap companies in the US with strong balance sheets and good growth estimates, we can do that pretty easily in seconds. I'm going to go ahead and screen for US so that we filter out those Canadian stocks. And in here, we've got the criteria. So any data point that is on Koyfin, pretty much any data point you can think of, can be filtered here. So we started with market cap, which is the default. So we're going to put a range of $50 million to $500 million. We can see that that takes it down from 8,800 all the way down to 1,900. So we've got rid of a lot of stuff there. We are interested in a strong balance sheet. So there's a few ways that we can kind of discern what a strong balance sheet is. If we really just want to whittle down the trash, we can filter for profitability and then also add some balance sheet stuff in there as well. So the first thing we might want to do, we want to exclude all companies that are not profitable on a trailing basis in terms of EBIT or operating profit. So we'll go ahead and add a filter there. And essentially all we want to filter for is something that is above zero. So something they're actually earning a profit. We can also add margins in there as well if you want to get really specific. But for now, we'll just stick to EBIT, and we'll go ahead and put net income in there as well. The income statement version. There is some nuance lost there in terms of like one-off recurring items, but if you really want to be stringent and just say we want both operating profit and net profit as well over the trailing 12 months, we can go ahead and add filters there. So we're going to take the EBIT over trailing basis and just add a zero. We can see it shows the upper range there as well. But when we add that zero, it's going to filter that 1,900 companies down quite a bit. And we also want to add a filter here for the net income line item of zero. And that's going to do its magic and filter those companies for us. The next thing we might be interested in as far as the balance sheet is concerned, we could filter for something like the current ratio, which just shows the ratio of current assets over liabilities, an indication, but not a conclusive statement on the company's ability to pay out their current obligations over the next 12 months. So we can go ahead and add a current ratio here. We'll go with the quarterly one because that is the most recent number. And we'll go ahead and add that. What we want to do here, we want like a current asset to liability ratio of, let's say, more than 1.5. So there's a bit of gap there. And what we can see here is that when we filter for companies in the EBIT profitability range, it's taken it down from 1,900 to 400. When we add that we want net income profitability, it's taken it down to 300. And for companies with a current ratio of more than 1.5, it's shed off about 80 there as well. So we can take that one step further and do a quick ratio, which is a more prudent test of solvency, I suppose, or liquidity, I should say. And we can just add a 1 there and see what that brings us down to. Yeah, so we shed another 40 or so. And the last thing we might be interested in here, because 191 is still a big list of companies to sift through, we want something that is expected to grow. So if we go to the filter criteria here, there's a range here called analyst estimates, and what this is going to show us is the consensus averages for things like buy ratings and sell ratings, price targets, forward estimates on a numerical and a percentage basis, and also estimates revisions as well. So if a company has recently had a revision for sales, if it's to the upside, that might be something we're interested in if the market hasn't really caught on to that yet. But we'll go ahead and go forward growth. What we want to do here is take a revenue estimate for the next year. So that's going to be the first unreported fiscal year, so the next full year. And we will say we want something that's expected to grow by 15% next year. So we've taken that big list of 8,000 or so all the way down to 23. So that's the basket of companies we're interested in. So we'll call this screen US small cap with clean balance sheet and expected growth. And we'll go ahead and create a screen there. And what that's going to do is give us the output with all of the metrics that we've kind of added there. If we want to add other things in there as well, we can. So we can go to the columns and pick anything from here, whether it's more information on the financials. We might be interested in the trailing free cash flow. We might be interested in the forward earnings. We can go ahead and add them, and they'll populate on this column here, which is nice. And we can download this table. We can twist all the data. We can do whatever we want. We can add return data as well. We can add some technical indicators. But the great thing about Koyfin is that when you've got this, it's saved in your screen. You can also save it as a watch list as well. So I'm going to go ahead and create that as a watch list. And a watch list in Koyfin has the Pareto principle of doing 20% of the work, powering 80% of the output. It's really powerful if you take the time to create watch lists in Koyfin. It really does fuel the rest of the platform, and I'll show you a bit about what I mean later on. So we've created this one. It's the US small cap with clean balance sheet. We've got it in a watch list. We can do whatever we want with that here. And just note that because we've created that, we can then pull that watch list and use it all throughout Koyfin. So I'll show a few ways we can do that. First one, we'll go to analytics here. If we were interested in, hey, when do these companies report earnings? We can go to the earnings calendar, and you'll see that we have a bunch of indices here. So you can look at the S&P earnings calendar for the next 90 days if you want. But we're interested in this watch list that we've just created. So US small caps. And we can see right here when they're all reporting earnings, what the kind of estimates for revenue are, and all that good stuff. Another interesting thing we can do is go to this market scatter graph, and we can pick our watch list that we just created, and we can look at the data this way. Right now it's set up for showing the range between the 52-week high and low, but we can also add like forward PE versus revenue or whatever you want to display in this kind of X by Y axis chart. You can do so. It comes with a table, you can download it. Pretty great. The screener has some other capabilities as well. Despite being a great screener in the US, you can also go global with that too. So we're going to go ahead and look at something a bit different. So we don't want to focus on the US. We want to be in the Asia Pacific region. We want to go with, let's say, India. So India, an interesting market. We want Indian stocks that have dividends that are growing, and we also want them to have a clean balance sheet and a stable payout ratio. So the first thing we can see here is that this is denominated in USD. We want to go ahead and change that to rupee. If we can find that, there we go. So now we can kind of toggle this around in rupee. Let's take the size of the company down just a little bit, just to filter that. In terms of dividend growth, okay, so we want something that A, pays a dividend. So let's go to dividend yield. We'll take the indicated number and we'll just stick a 0. Oh, we don't want a 0. We want a 0.5 on that to indicate they pay a moderate dividend. And 24.8 is the upper range. We definitely don't want something up there because it implies a lot of things, but high yield is typically a trap, and we're not as interested in the outright size of the yield, more so that they have a fair yield and they're paying it. So we'll go to 6.5 yield for the maximum, and that's going to shed a few companies off that list. The next interesting thing that we want to know is, are they growing the dividend over time? Because if we're looking at dividend yield on an indicative basis, it might be that they've just started paying a dividend. It might be that they've been stopping and starting over years, and we're just picking up those that currently have a yield. So we want something that's been growing dividends for a while. So let's type in dividend. We've got a bunch of options here, but what we are interested in is a dividend CAGR. So there we go, dividend per share CAGR. And we will go, let's say, over the last 5 years on an annual basis. We're interested in knowing if they've been growing the dividend over that period of time. So you can see there is a range here that's in the minus 33% on the minimum. That's someone that's been decreasing their dividend. We definitely don't want that. So we want a minimum CAGR over a 5-year period, let's say of 7.5, pretty lofty, but that's what we want. So we've cut that more or less in half, slightly more. And we want something that has a stable dividend payout ratio as well. So we can click this, we will go on a trailing basis, and we don't want anything that's more than 100%. There's a lot of nuance to all of these data points. For example, Starbucks in the past has used debt to pay their dividend, but the cash flow that they had coming in over the next few years was good enough so that most investors could kind of let that slide. But generally, it's not a great idea to be using capital other than your cash flow to be paying dividends. It's not the most sustainable practice. But before I ramble on, we're just going to pick a payout ratio that is less than 45%. And we'll see what that gives us. So that's 200 companies there. That's pretty interesting. And maybe if you want to filter it a little bit more, we can go back to that trusty current ratio, and we can filter for that as well. We'll go a minimum of 1.25. Okay, let's take it up a little bit more. We'll go 1.85. We want a lot of stability there. Okay, that's a good number. And we want something that is operationally profitable. So we'll go EBIT, go last 12 months. We'll change that to rupee. And we'll go 0, just to make sure they're not loss-making. So that is 136 matches. It's quite a lot, but if you're not familiar with the Indian market, it might be a fun way to explore a bunch of companies in that space that are paying dividends, they're growing dividends, they have a fair balance sheet strength, and the payout ratio is not excessive. So we'll go ahead and call this our Indian dividend growth stocks basket. We'll create the screen. Here's our output. We can go ahead and save that as a watch list as well so that we can play around with it in the platform later. And let's go ahead and check that out. So here's our Indian dividend growth stocks. And with any of these, we could go ahead and chart the revenue there. We can turn it into a bar chart. We can add gross margins. We can really do whatever we want with that. And we'll go trailing. And we could turn that into a bar chart or an area graph if we want. We can pull that out and contort the data in whatever way we want. The interesting thing here is you see it's presenting in USD. We obviously do not want that. So we can show this in rupee too. And there we go, it's applicable. We can then jump into the financials. We can change that to rupee so that it's presented correctly. And we now have access to the income statement, the balance sheet, the cash flow statement, the multiples, the enterprise value, profitability ratios, anything you want to build in here, you can do so, and you can create custom templates to kind of present the data in the way that you want it to be presented. So that is great. Just an indication of, when you found this basket of stocks, you can then go to explore them. You can go and explore them within Koyfin. So we'll go back to the screener. I'll show you a couple more things just before we head off. So we've done a lot of fundamental stuff here. If you're more technically inclined, which I'm certainly not, so pardon me if I do anything incorrectly, but we also have all the technical indicators that you could want in Koyfin as well. So we'll just stick to the US this time. We'll go country, US. What we might be interested in here is maybe companies that they're trading near their highs. We could find those. We could find something with maybe positive sales and earnings revisions. We could do that as well. Maybe we'll do both. Okay, so first, market cap, we don't care. We're indiscriminate to market cap. What we're really interested in is companies trading near their 52-week highs. So we have the market data here, which is going to show us all that kind of stuff with price and technicals. It has its own technical area here that we can play with, beta and moving averages, the distance from those moving averages and all that kind of stuff. But we want 52-week low data. So we want something that is below the 52-week high, and we want it to be within 5% of the 52-week high. So this is indicative, but again, not a conclusive statement on price action. This company, for whatever reason, is trading near its high. It might be for some exuberance in the market. It might be for some reason they've had positive earnings revisions that's sent the stock soaring. We don't really know, but it's the grounds for creating a basket of companies in this region that we are interested in. So trading near the 52-week highs, that's pulled it down from 4,300 to 800. We might be interested in something that is expected to grow revenue next year. So we can go to the analyst estimates tab and go to the forward growth like we did last time. We'll pick forward revenue estimate of 1 year. And we will say we want something that's really expected to grow. So 20% revenue growth next year. 61 matches. That is a nice filter there. And we're going to go ahead and pick something a bit more specific. And we have ratings data here. So there's a bunch of things you can choose from here. The average analyst rating, 1 through 5. 5 indicates a buy, 1 is a sell. So we're going to pick that, and we're going to filter for anything that's over a 4.5. So something that's kind of highly regarded by analysts for whatever reason it might be. We're going to call the screen 52-week highs with buys. It rhymes, but what we're saying here is 52-week highs with buy ratings and forward estimates for revenue looking good. So we've created that screen here. We can go ahead and save it as a watch list, but we can see a few of the outputs here. If we're interested more on a technical basis, like Inspire Medical Systems, for example, we can go ahead and pull up a chart. If we've created some kind of technical chart template in the past, we can pull that up and analyze it that way. You can add the RSI, relative strength. You can chuck that in there as well, and you can save all this kind of stuff as a template and pull it and port it all over Koyfin and do what you want with it. So that is great. The last thing I wanted to show you is another type of screening. We can go back to US, back to the country. We'll pick US again. So something that might be interesting if you want to get a bit more in the weeds and specific is we want something maybe with high sales growth, but not just for 1 year, maybe for the second year. We want something that's maybe had positive sales growth revisions quite recently in the last 3 months, let's say. We might want to search for something that is trading at a favorable range from its price target on the consensus level. And we also might want something that's a buy rating. So we'll go back to analyst estimates. We will go ratings. We'll pick average. But this time we'll be a bit more lenient and pick a 4. So in the US, we've got 1,800 stocks that have a buy rating of 4 and above. If we want to be a bit more stringent, we can take that to a 4.5. Sheds a few more. High sales growth. So we want something that's projected to do pretty well. So we're going to go forward growth, revenue on a year-over-year basis. But this time we're going to go for the second year, and we want something in the, we'll say 15% range. See how much that sheds. So we got 250. That's pretty nice. But we also want something that's had a positive revision. So I'm going to go ahead and type revision in there, and you'll get these revisions for all the different types of metrics, but we want revenue. We want the average revenue revision for the consensus, and we're going to go ahead and pick the 3-month, and we want something that's just positive. So we're going to put a 0 on the minimum there, and there we go. That's cut in half again. The last thing we might be interested in, if we go to analyst estimates, we go to price target. We can show you the price targets in a watch list, or the average and the highs, but what we're interested in here is the price target versus the current stock price. So we go ahead and pick average there. Well, let's just filter it and see. We want it to be under the price target, so that's taking it down to 6. So we can go ahead and create that screen here. So we want something that is positive sales revisions. We'll just call it that. We'll create that screen. We've only got 6 companies to choose from here. So we can then dig into each of these and assess, if these are companies that we're interested in. The last thing I want to show you with screening, we've done a lot. We've done some fundamentals. We've done some technicals, some revision stuff. There are some fun hacks that you can just do certain things with the Koyfin screener that make life easier. So for example, if you're interested in viewing the components of the S&P, you can type in the S&P, get an ETF for that, and you can view the ETF and all of its data and components here in the snapshots section, and you can see the individual components, the ETFs and their returns and contribution. So what this is showing you here is that the S&P is up 90%. Apple is about 3% of that, which is interesting. You can download this. But if you want to do something else with this data, you can screen for S&P components. So we'll go ahead and go to the screener, and we can search by ETF constituents. So we can go ahead and pick the S&P ETF there, and that's going to pull up all the ETF constituents for us. And we'll go ahead and create that screen, and we'll call it S&P 500. So we could create that screen, and what we'll do is pull down a big list of every S&P constituent, and we can contort that data and add columns to it if we want. So we'll go ahead and do that. So that's nice, and we can add some columns to that, like total return, year to date, and then we can filter, for example, by year to date. But another interesting thing you can do, if you don't want to have to add all the columns, we can go ahead and modify the criteria for this. Let's say we're interested in companies in the S&P that have 10 bagged in the last 10 years. So what that means is went up by a magnitude of 10 times. We can filter by total return. We will go for a 10-year basis. And we want something that's over 1,000. So the minimum is 1,000, which is 10x. So there's only 27 companies in the S&P that have 10 bagged in the last 10 years. So we can go ahead and save that. We could call that S&P 10 baggers, whatever it might be. But pretty interesting data. We can see here that NVIDIA is up, 13, almost 14 times in the last 10 years. I'm suspecting most of that has came recently. But yeah, again, you can filter and get the data output that you want. You can then take these securities and study them within Koyfin, but you can save that for another video. Appreciate you listening, and drop a comment below if you have any questions about the screener or Koyfin generally, and we'll follow up. So thank you.